$29.1 billion. Sysco is just buying the entire cash and carry market with Jetro.
Wall Street is already playing defense. When analysts rush to justify a price tag that huge, it's a massive red flag.
Oh, come on, it's a brilliant pivot. At least they aren't all birds selling for $39 million. Remember their billion-dollar IPO?
The sneaker graveyard spares no one. But before we mourn the tech bro uniform, we need to look at Cintas dropping $5.5 billion on UniFirst. The rundown.
$39 million. That is what a former billion-dollar IPO darling goes for these days.
American Exchange Group is getting a bargain if you still think wool sneakers are cool. But honestly, looking at the Allbirds cash burn, $39 million feels generous.
It is a brutal reality check for the whole direct-to-consumer era. Speaking of direct-to-consumer, though, Danone is buying Huel for exactly $1 billion.
See, this one I actually hate. $1 billion for Tech Bro protein sludge.
Oh, come on. Do not underestimate the sludge. It is basically a subscription software model, but for calories. High margin, predictable, recurring revenue.
It is powdered oats, Nate. You are talking like it is SaaS. Danone is overpaying because they missed the first wave of functional nutrition.
Agree to disagree. Danone needs the growth, but if you want a real picks and shovels play, look at Ecolab, $4.75 billion for Cool It Systems.
Now that is a brilliant deal. Ecolab is known for water and hygiene, right? But they realize every single private equity firm is pouring money into data centers. Data centers run hot. Cool It cools them down.
Ultimate backdoor AI play. You do not buy the chipmaker, you buy the guy selling the liquid cooling to the chipmaker.
Exactly. And the multiple actually makes sense when you look at their forward projections. Unlike Cintas, dropping $5.5 billion on UniFirst.
The uniform wars. Cintas just wants to own the entire industrial laundry market. Boring, but it prints cash.
Have you seen the antitrust footnotes on that one? Cintas is acting like the FTC is just going to wave through a $5.5 billion duopoly merger. Good luck.
The bankers definitely earned their fees writing the synergies section on that deck. Hey, quick rumor mill check. Madrigal Pharmaceuticals is spiking again.
Again, how many times are we going to hear takeover chatter about Madrigal? Show me a term sheet or I do not care.
The market cares, but fine, we can skip the gossip because we have to talk about the absolute monster on the tape today.
$29.1 billion.
Sysco swallowing Jetro Restaurant Depot. Wells Fargo is already out here playing defense for them. The big one. $29.1 billion for the place where you go to buy 50-pound bags of onions and industrial vats of mayonnaise.
Respect the mayonnaise, Nate. But seriously, $29.1 billion. Sysco is not playing around here. Buying Jetro Restaurant Depot is a monumental pivot for them.
It's the ultimate flex. Sysco already owns the delivery routes. They're the giant trucks double parked in front of your favorite bistro at 6 in the morning. Now they want the physical store where the chef goes when he forgets to order tomatoes.
Right. They're officially entering the cash and carry wholesale market. But look at the price tag. Almost $30 billion to acquire a completely different operating model. Sysco is a pure logistics play. Jetro is retail. Those are completely different beasts.
I love this deal. I think it's brilliant strategy. Sysco misses out on the mom and pop restaurants, the food trucks, the weekend caterers who refuse to hit a delivery minimum. Jetro totally owns that space. Sysco just bought the entire bottom half of the food service market in one single swipe.
I don't hate the logic, I hate the price.
Spoken like a true skeptic, you always hate the price.
Because the math has to work. Read the analyst reactions. Wells Fargo actually had to put out a client note specifically defending the deal.
They were highlighting the strategic value of unlocking cash and carry.
Nate, whenever a major bank has to aggressively defend your mega deal on day one, you overpaid. They're doing damage control because the street looked at $29 billion and choked on their morning coffee.
Oh, come on.
It's true. Sysco is paying a massive premium to potentially cannibalize its own lower-tier delivery customers. If I'm a small restaurant, why pay Sysco delivery fees when I can just drive to my local Jetro?
It isn't cannibalization if you own both plates. Better to eat your own lunch than let your competitors eat it.
That's actually a fair point. But managing physical retail footprints? The overhead is entirely different. Jetro has these massive, chaotic warehouses. Sysco is used to loading docks, highly optimized routing software, and predictable recurring orders.
They'll figure the operations out. The cross-selling opportunities are just too good. You hook the food truck at Restaurant Depot, and when they finally grow into a brick and mortar spot, you transition them to a Sysco delivery contract. It's a life cycle play.
A $29.1 billion life cycle play. I need to see the integration plan before I buy this synergy narrative. I guarantee the footnotes on those warehouse real estate leases are absolutely terrifying.
You and your footnotes, I'm telling you, 10 years from now, we look back and say this was the exact move that made Sysco completely untouchable.
We'll see. Speaking of untouchable, let's talk about a different kind of cleanup. Cintas is dropping $5.5 billion to swallow UniFirst. Voices?
I'm looking right at the Wells Fargo note from this morning, and they're aggressively defending Sysco here. They're calling the Jetro deal a strategic masterstroke to unlock the cash and carry market.
Unlocking the market. That's my absolute favorite analyst euphemism for overpaying by billions. You don't just unlock a market for $29.1 billion. You're buying the entire door and the house attached to it.
Oh, come on. Jetro Restaurant Depot is a totally different beast than Sysco's usual delivery routes. It's a completely new revenue channel. The analysts are right on this one. Sysco needs this to capture the independent restaurant owners who want to buy their own bulk inventory.
I'm not debating the channel. I'm debating the price tag. Wells Fargo is just trying to justify the massive multiple because the sheer scale of $29 billion makes everyone nervous. The footnotes on this integration are going to be a nightmare.
Spoken like a true skeptic. Speaking of nervous money, market watchers are losing their minds over Madrigal Pharmaceuticals again today.
The takeover chatter is back.
Swirling hard, the stock is climbing just on the pure speculation that a buyout is imminent.
I'll believe it when I see a signed term sheet. Biotech rumors are a dime a dozen. I'm actually way more fascinated by the Allbirds news today. Did you see American Exchange Group is bailing them out for $39 million?
$39 million. Wow, remember the IPO? They were valued at over $2 billion just a few years ago. Now the stock jumps 30% on a $39 million rescue package.
It's the ultimate corporate humility. You go from Silicon Valley's favorite sustainable footwear unicorn to a rounding error for an accessories holding company.
The Tech Bro uniform is officially dead.
Speaking of uniforms, Cintas is trying to clean up the rental market with a massive $5.5 billion play for UniFirst.
The antitrust flags are already waving in my head on that one. We'll tear apart that market overlap right after the break. Spill the tea. $39 million. That is the exact price of a former Silicon Valley uniform.
I was wondering when we'd get to Allbirds.
American Exchange Group is throwing them a $39 million lifeline. I mean, remember 2021? Every pitch deck I saw was presented by a guy wearing gray wool sneakers. They had $1 billion IPO valuation.
Try $4 billion at the peak. And sure, the stock jumped 30% on the news of this rescue acquisition, but 30% of pennies is still pennies.
Exactly. It's a total wipeout for the early believers. But you have to admit, for $39 million, American Exchange is getting massive brand awareness. It's a brilliant distressed asset play.
I completely disagree. Brand awareness means nothing if the brand is associated with zero growth and soggy feet. They're just buying a zombie shoe company to strip it down and license the logo.
Oh, come on. You don't think there's a real turnaround story there?
Show me the margins on sustainable wool and I'll show you a turnaround story. Right now, it's just sad. I read the filings, Nate. The cash burn is brutal.
Fair enough. You always ruin my optimistic banker dreams. Speaking of things pumping purely on hope, the rumor mill is spinning completely out of control on Madrigal Pharmaceuticals again.
Right, the classic M&A phantom menace.
The stock is absolutely flying. Market watchers are aggressively betting a buyout is imminent.
But who is actually buying? Every time Madrigal pops on takeover chatter, I read the notes and it's just circular logic. Someone hears a whisper, the stock climbs, and then they use the climbing stock as proof of the whisper. Show me a term sheet.
You're so cynical. Sometimes a rising stock just means the advisors are terrible at keeping secrets.
or they're incredibly good at leaking them to pump the valuation.
True, either way. Between Madrigal rumors and uniform shoes dying, it's a weird week. But nothing is weirder than what's happening in the wholesale food aisle.
Oh, you mean Sysco dropping $29.1 billion to buy Jetro?
Exactly. Wells Fargo analysts are already out here running aggressive defense for it. We need to unpack this cash and carry monster. Tomorrow's radar. I'm telling you, the Madrigal Pharmaceuticals chatter is real this time. Look at the stock today.
Oh, please. We hear Madrigal takeover rumors every 6 months like clockwork. Show me a term sheet.
The market believes it.
The market also thought Allbirds was worth over $1 billion at IPO. Now they're getting rescued for $39 million by American Exchange Group.
$39 million. I swear my old MD expensed more than that on steak dinners. But a 30% stock jump on a pity buyout is hilarious.
It's just sad. What I'm actually watching tomorrow is the Yes Way IPO filing, a convenience store chain testing these public markets. Good luck.
Don't sleep on gas station snacks. The margins are beautiful. But my real radar is Mondays. They have runway to push their GetLink stake up to 19% by April.
That assumes they actually want to tie up the capital right now. I don't see the math working.
Oh, they want the infrastructure play. Speaking of massive physical footprints, we need to talk about Sysco dropping $29.1 billion.